This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to be joined by RSM partner Rick Kes. Rick, so many different things going on in the private equity world. A big deal announced today for Skechers, a $9.4 billion deal. That's a welcome positive after a quarter that seemed very slow on deals. Apollo, their CEO, says in an interview that they've largely been on deal pause for a little bit. What is the reading into the tea leaves? What are you seeing at RSM in terms of the deal world, and what can we expect?
Yeah, I mean, Scott, I think, obviously the deal world's been a little slower than anyone would probably like it to be. Lots of reasons for that. Obviously, we got interest rates, higher than we would normally like them to be. We've got, political uncertainty, things of that nature. Obviously, I think people that listen regularly know I follow healthcare the closest, and healthcare's got, a lot of headwinds between Medicaid changes and other things that might impact the healthcare world, especially in the services sector. So, I think there's a lot of headwinds in that respect. I think a lot of us are still thinking like at some point big deals have to happen. I mean, like you mentioned this deal today with Skechers and other deals, I think with the amount of capital that's available to be spent, and then the hold period that some of the investments are at, in terms of what happened in 19 and 20 and 21, with the deal flow volumes that we saw then, a lot of those kind of are at the hold period end. So you'd think at some point some of these assets will start trading again, and some of these funds will put their capital that they have available to use, but at what point that might be, it's hard to tell. I mean, unless you have a crystal ball, I guess, So, I think we'll continue to kind of work on, being prepared when that deal flow volume kind of opens up, if the spigot opens up, so to speak. And then, I think at this point we're still kind of waiting for that to happen.
Thank you. And what do you sort of see in terms of opening up, starting to get going again? What is your sense? Are you starting to hear more rumblings of it as the stock market returns? Are people feeling a little bit more confident, or what do you see?
Yeah, I mean, obviously the public markets inform people just because of the availability of data, right? People can access it, they understand it, they see it on the news, everything, it's right in front of you all day long. So, I think the public markets influence sentiment, they influence lots of things. So I think, as the public market continues to hopefully recover from, the turmoil we saw during, the last couple of weeks related to tariffs and other things, I think that will create better sentiment, which will obviously just hopefully change the mindset of a lot of people. But, I think because of that, you'll see hopefully some recovery, some rebounding. But I do think the other part too is just timing is everything. And, as we see these, negative news stories come out, as time elapses, people start to forget about it, or we start to understand what the real impact is, and not just rely on kind of the news headlines. We see like, okay, well, if tariffs went up, what happens to the, price of this product or that product? Instead of uncertainty, now we have certainty. We start to know, we start to figure things out, we start to realize how we can adapt. And I think the successful businesses will adapt quickly and, hopefully be prepared to move forward with things that they were originally planning on doing. So again, I think, these times, just like any times, we talk a lot about, when deal flow isn't happening, focusing on your business model, focusing on your, efficiency, and focusing on becoming the highest grade asset you can be. I think, and in addition to, focusing on those things, also focus on being nimble and being understanding how to adapt and change to the economy as it continues to change, because, those are the companies that are likely to be the most ripe for sale, are those that can prove that their ability to adapt is a market differentiator against their competitors.
Yes, and when you mentioned something about the headlines cause all kinds of turmoil, and then things sort of seem to calm down. How do private equity funds, buyers, sellers, sort of filter through that noise so they stay calm and keep on trying to put money to work and build businesses?
I mean, I think that's the definition of success in some respects is to, I think a good leader can lead their team through that turmoil, right? You hear something, hear a bad news story or something, maybe even something that's impacting your sector, say you're in healthcare services, and you hear all these news about potential cuts to Medicaid, and maybe you're heavily reliant on Medicaid. If the leader of your company or the leader of your PE group is telling you, hey, we're going to get through this, we're going to move forward, we're going to find a way to be profitable even under, reduced reimbursement rates or something. If the leader of your group is telling you that and making you feel that that's accurate and that you can achieve those goals, well, then, that's how you succeed as a business. So I think it all comes down to good leadership, really.
And a lot of it is staying calm under pressure. I mean, I know that, for example, I've been through this long enough for 30 plus years that when one of my kids or colleagues asks me, oh my goodness, should I sell my stock because it's all tanking right now? I've at least been in this long enough to know don't sell into the dip. And I think it's the same thing for private equity leaders that have been in this for long enough time to know it's going to be up, it's going to be down, but it's going to be okay. So try and hang tough a little bit, and we'll keep on moving forward.
Well, yeah, and almost to some extent, if you're confident in your business model and you're confident in your ability to succeed, double down, invest heavily in the dip, right? Like understand that this is the time to really focus on your business and to, make sure that you're as efficient as possible, that your technology is as strong as possible to run your business so that when you can grow, when you can do acquisitions and bolt-ons, that your platform is sustainable and its ability to be agile is at the highest point possible.
No, I think that's right on. And it's this challenge of doubling down. There's some people great that are available for hire, but you also want to make sure that those people get built in and baked into your company, your culture. So as soon as the market turns in the right direction, they don't leave too. So it's this complicated thing about doubling down on different people and technologies and other things, and hoping you could retain them when the market turns back up and they don't become jumpers too. So it's really being careful in that hiring process. But there is this chance to double down and find some great people at a time when the market's in turmoil too.
Oh yeah, definitely. I totally agree.
What a fascinating situation. Well, we're hope that this pause starts to become a non-pause. We'll get back to go. But Rick, fascinating to watch and always fantastic to visit with Rick Kes, brilliant partner from RSM, the best in the business in what they do. Rick, thank you so much for joining us today on the Becker Private Equity and Business Podcast.
Thank you, Scott.